Hi, everyone. Well, we've all seen recent headlines related to economic uncertainty because of inflation and other key economic data. We've seen headlines related to the housing market shift that we're in. Some would even say a housing market recession. Well, how does that impact you and me as homeowners, prospective home buyers, and renters? And what can we expect in the months looking forward, even into next year, so that we can have the best information at hand to make our next move? Stay tuned for this episode as I cover the most recent market data for Boulder, Larimer, and Weld counties, as well as some expert opinions and what we can expect in the housing market for the months to come. Stay tuned. Hi, everyone. Welcome to Real Estate on the Front Range, my weekly podcast where I cover all things real estate here on the Front Range of Northern Colorado. Join me every week to get market updates, tips, and information on relevant topics to make sure that you're fully informed before you buy or sell your next home. This is Sean Gilliam, your host, and I look forward to you joining me on Spotify, Google, Apple, or whatever your favorite podcast app is for the latest episodes. Welcome back to another episode of Real Estate on the Front Range. In this episode, we're talking about the monthly market update for September. We'll take a look at the most recent data for Northern Colorado so you can get an idea and see some trends and how that might help you as a homeowner, a prospective home buyer especially, or even a renter if you're thinking about buying a home and you want to stop paying somebody else's mortgage. Before I get into that, though, like I said at the intro, I'm going to cover some important quotes and important data in forecasting what home price appreciation will look like, and so that you can get an idea of what to expect here moving forward. So I'll go ahead and get started. The first one that I want to look at is a quote from CoreLogic, and they are projecting that annual home price growth will slow. And so here's their quote. Annual home price growth slowed for the third consecutive month in July, but remained elevated at 15.8%. As 30-year fixed-rate mortgages neared 6% this summer, some prospective homebuyers pulled back, helping ease overheated and unsustainable price growth. Looking ahead, CoreLogic expects to see a more balanced housing market, with year-over-year appreciation slowing to 3.8% by July of 2023. And this is based on information from their latest Home Price Insights report. And so they're seeing or expecting to see a trend of home price growth slowing rather significantly for this year. And that's something, if you've seen my more recent market updates, that's I've quoted some other experts that feel the same way. However, I'm going to show you a slide here that shows that people are going to change their forecasts, or some of the experts change their forecasts for the year based on recent market data. And so we see Fannie Mae, Freddie Mac, National Association of Realtors, Zelman, Mortgage Bankers Association, and Pulsenomics. And they've all chimed in that, their original forecast for the whole year has changed. They believe it's home price appreciation is going to be greater than what they originally thought earlier this year. So Fannie Mae, their original forecast was 7.6%, but right now they think overall it should be about 16%. Freddie Mac originally forecasted 6.2%, but right now they're projecting that it's going to be about 12.8%. The National Association of Realtors projected 5.1%, but they're projecting now that it's going to be about 11.5%. Zelman originally predicted about 3% home price appreciation. Now they're forecasting 10%. Mortgage Bankers Association originally forecasted 5.1%, but now they're looking at about 9.9%. And Pulsenomics originally forecasted 6.3%, but now they're looking at about 9.3%. So it's interesting as we've gone throughout the year. We're here, the most recent data would reflect August, and they're projecting that home price growth for the year will be raised compared to what they originally thought. I think the lion's share of growth occurred in the first half of this year when we saw really intense market activity. And at that time, homes were still selling over list price, even significantly over list price. So I think the data is reflecting what's going on in the first half of the year. I think what's going to bring the forecasting lower than what it was originally forecasted, last year when we were looking at, 20%, those kinds of percentages. What's going to bring it down is what the market activity is like here in this latter half of the year, at least in this local market. And I think it's true across the nation. We're seeing more price reductions. We're seeing homes stay on the market longer. So we're not going to see the intense amount of price appreciation. But when you balance it all from January through the end of December, we're going to see an average increase, I think, similar to what these guys are forecasting. Now, here's another quote from Mark Zandi. He's the chief economist for Moody's Analytics. He says, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. Now, I think I agree with him. Obviously, he's the expert. But I think there might be some areas across the country that see some declines. However, not so much here in Northern Colorado, only because we have a solid economy. We have the tech sector, we have aerospace, we have all sorts of opportunities here for people to work. And it's solid across the board. We're not seeing a huge negative impact in our local economy, despite what's going on a national level with inflation and other factors. So I think overall we're in good shape. I don't think we're going to see price declines, but we are going to see that slowed appreciation overall compared to recent years with the intense market that we've had. I think the real issue here, though, is housing affordability. And here's a quote from the National Association of Realtors regarding the average monthly mortgage payment. Compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265, an increase of 53.7%. So what's really going on in our market, you have home price appreciation as well as raised interest rates. Right now, we're just over 6% here in September of 2022. And that just makes home affordability out of reach for a good number of people. And you might be able to relate to this. You might have had plans to buy a house, but when you look at that mortgage rate that you're going to be paying every month with these higher interest rates, you're probably stepping back and saying, no way. In fact, we've seen people pull out of transactions because they just can't afford those monthly payments. And of course, I give people my advice. If you can afford it, if you can afford those monthly payments at the current rate that we're at, now is a good time to buy, only because there's very little competition and sellers are more willing to negotiate. So in that regard, the market is in your favor. Again, if you can afford it, that means if rates don't go down, you're comfortable with your current mortgage rate and your current monthly payment. So make sure you take all those variables into consideration if you're willing to purchase a home right now in this market. But like I said, for some people, it's just it makes it unaffordable. I know some clients that make good money, but even in light of that, those higher interest rates just put those homes out of reach and unaffordable. So that's something to consider here as we move forward with this market. The good news is, though, home sellers are often doing home price reductions, and that gives you more negotiating power as a buyer. So it's possible that some of those homes that right now, because of interest rates are higher, are out of your reach. Who knows? In the next month or two, they might reduce their prices into your price range. So keep an eye on those things. Don't necessarily count yourself out, but just pay attention to what's going on and what you can afford. And I can help you with keeping an eye on what's happening in the market and home prices so that you can potentially get a home that you can afford that's going to work for you. All right, now let's go ahead and take a look at the key market data for our local housing market. And I'll point out some trends. I think some important things that we can expect to see is that, and I pointed this out before in recent market updates, is that the days on market until going under contract continues to rise. And I think the local data, as we'll take a look at here shortly, will bear that out. Also, the percent of original list price received continues to go down. And so homes are not selling at their original list price as they were several months ago. And then also inventory will continue to rise. However, as we'll see in the data, it hasn't risen sharply month to month. We're still in a seller's market based on the data. However, negotiations are more balanced between buyers and sellers right now. Sellers are willing to sell and they're willing to do more things for buyers than they would have ever done or even considered months ago. And then also, I want to point out too, when we look at the data, most new listings still tend to hit the market mid to end of the week. However, we're not seeing any of the multiple offer scenarios like we used to see, where all offers are due on Sunday at 5 p.m. and the sellers will respond by Monday or Tuesday or whatever the case may be. There were various variations of that. We're not seeing that as much anymore. What's new is that we're, in addition to homes continuing to be listed about mid to end of week of any given week, We're also seeing about as many price reductions on homes during the same period each week. This includes new construction. Several months ago, new construction communities were doing price reductions every month or every other month, or price increases, I should say. Sorry. But now we're seeing price reductions. And so this is the trend that we're seeing in the market. Sellers are getting more, I won't say desperate, but they're getting more creative in ways to attract buyers to buy their homes. So again, if you're a prospective buyer or if you're a renter that's wondering if you can even afford a home, it's a good time to consider that. It's a good time to talk to a local lender and see how much home you can afford, what the monthly payment might be, and you might be surprised to find out that you can afford a home. And in this market, you have limited competition, and you might find some sellers that are more than willing to accommodate your situation so that you can get the home that you can afford and that is going to best meet your needs. So good, important things to consider with the trends here in our local market. And without further ado, I will go ahead and get into our most recent market data. All right, so here we have the most recent market data at our fingertips, again, for Boulder, Larimer, and Weld counties. And what I'm going to do, this is the most recent data, so for the month of August. I'm also going to highlight a few key aspects or key pieces of data from the month prior, so the month of July, so that you can kind of see how the month or the market is trending month over month. So here for single family homes in Boulder County, you can take a look at days on market until sale. So it's 44 days from the time a home is listed until it goes under contract on average. That's up 4.8% from last year at this time. However, when we look at July's data, the month prior, it was 34 days. And so as you might recall, I just mentioned that the trend is going upwards as far as days on market until sale. And we're seeing that bearing out here in Boulder County. So it went from 34 days to 44 days between July and August. And then also, as we scroll down here to percent of list price received, right now it's 99.2%. And that is down from last year at this time when it was 101.4%. But when we compare it to last month, it was 99.7%. So not a huge change, but it is trending downward. Inventory of homes for sale is 574, and the month supply of inventory is reflecting that. So we got about 2 months supply of inventory. That's up 100% from last year at this time. When we compare it to July, it was 2.1 months supply of inventory, so about the same. So we're not seeing a huge change in month supply of inventory, but it is still staying relatively high compared to what it was last year or even a few months ago when we had our hot market in the spring. Also, if you look at Boulder County, the average sales price is just over $1 million. That's remained consistent, and the median sales price is about $830,000, up significantly from last year at this time. So still, I think that's reflective of the fact that home values have gone up, as we've seen across the board. So that's the data for Boulder County. Now let's skip over to Larimer County. We can see the days on market until sale is 46. That's about the same as it was last year at this time. But when we compare it to July, it was 41 days on market. And so not a huge change, but we're still starting to see that trend, an upward trend in the days on market until a home goes under contract. Then we skip down here to the percent of list price received. That's 99.4%. That's down almost 3% from last year at this time when it was 102.4%. However, when we compare that to July, homes were selling on average at 102.2% or 2.2% above their original list price. So we've dipped below that. And again, that's a downward trend that we expected to see with this housing market shift. And then month supply of inventory is 1.8. And that is just down from or about the same as July when it was 1.7. So again, similar with Boulder County, we still have higher inventory than we had last year at this time or even a few months ago, but it's not significantly changing right now, it's staying about the same. And one can speculate as to why that is. It could be just because there has not been a whole lot of new listings on the market due to the season that we're in. You know, school has started and a lot of people don't want to make a move right now. So that could be partly why we haven't seen the inventory significantly continue to increase. But it is remaining about the same as it was last month. And then we take a look at the average sales price for Larimer County. That's $639,000. That's up 2.7% of what it was last year. And then the median sales price is up almost 9% from last year at this time. Right now, it's at about $575,700. Moving over here to Weld County, looking at the days on market until sale, it's 38 days. That's actually down from last year at this time when it was at 43 days on market until sale. Or until going under contract. When we look at July's data, there were 30 days that a home would stay on the market until it would go under contract. So again, it's just an indication that that trend is moving upward for days on market until sale. When we look at percent of list price received, on average, homes are selling at 99.9% of what their original list price was. That's down from last year at this time when it was 102.4%. And it's also down from July, the prior month, when it was at 100.8%. And so we're seeing a slight trend downward as we expect to see in this housing market shift that we're in. When we look at month supply of inventory, it's at 1.8. When we compare that to last year at this time, it was 0.8. So that's 125% increase in inventory compared to last year at this time for Weld County. When we compare it to July of this year, when it was at 1.7 months supply of inventory, we're about the same. So again, we've seen that across the board here with all three of these local counties, that inventory is staying about the same right now overall. But we are seeing that decrease trend in percent of list price received and the increase in the trend of days on market until sale. So that is our local market data. You know, the average sales price for Weld County is $536,000. That's up 10% from last year at this time. And the median sales price is $495,000, and that's about up 11% from last year at this time. So again, I think that just reflects that home values have appreciated over time just because of the intense market that we've had in the last couple of years. And we're just bearing out the results of that. So that is the local market data. If you have any questions about any of this information, feel free to get in touch. And then also, as I mentioned earlier, it might be a good time to buy. So don't be scared off by the headlines that we see in the news or home values. It might be that because the market has slowed significantly and homes are sitting on the market longer, and we're seeing more and more homes do price reductions as they're staying on the market longer, you might be able to afford the house that will be a great fit for you. So it's at least worth checking out. If you want more information, if you want a list of local lenders that do a great job for clients of mine, I can furnish you with that information. And at least you can find out how much home you can afford and whether or not it's a good idea for you to consider buying a home right now. So feel free to get in touch with information on that. If you're looking to sell your home, I can help you with finding out what your home is worth and what you might be able to sell it for. I take a conservative approach in this current market. I'm going to tell you the truth that the way this market is rolling, you have to be very specific about the data and what's going on, even in the most recent week or 2 weeks, just to see how sellers are having to accommodate this market or navigate through this market. Right now, homes are just staying on the market longer. So we'll price it accordingly. I'd be glad to give you some advice and tips on how to get your home ready for sale. And yeah, anything I can do to help, feel free to get in touch. You can call me at 970-313-6706 or watch the end of the video and you'll see my phone number as well as my email and website. We'll look forward to talking to you soon. Take care.